Well, welcome back, ladies and gentlemen, to ALT5 Sigma's channel, the next generation blockchain platform. Joining to give a high level overview of the company through the investor deck today, Vey, the President and Chief Revenue Officer. First and foremost, welcome, sir.
Thank you again, Kyle.
It was a pleasure. So I'm going to hand the reins over to you to kind of walk us through this.
Perfect. Thank you, everyone, for your time. So I'm just going to run quickly through the high-level investor deck that we are currently using. Obviously, the standard disclaimers. Here, really, let's get right into it. What's ALT5 Sigma all about, and really why you should be looking at the stock and the company right now. First and foremost, we are not a startup. Been operating for 6 years. First 2 years of development, getting licenses, getting the compliance in place, getting all our regulatory infrastructure ready to go. The third year we operated, it was 39 million US of volume that we processed, and then last year it was 1.14 billion. So and that's US dollars. So tremendous growth. We are focused strictly on B2B clients. So we do not service or want to attract and pick up retail investors or retail clients. We serve companies. That's what we do. Fintech companies, merchants, online merchants. Those are our client base. What is it exactly that we do? We process payments in the crypto space. So we convert crypto to fiat or vice versa. So we allow a merchant to enable them to accept crypto as payment for their services and the products. So, you know, you're selling a camera online. One of the buttons will be crypto, and the checkout page that will go to our payment rails. We'll run and process that transaction and take a fee for it. That's strictly what we do. We're in the background. We're infrastructure. We're a pipe. So you'll never actually see Alt5 payments, anywhere on that page. You will be dealing with that merchant. As I mentioned, we're fully compliant. It's a big part of crypto and blockchain. You need to have your licenses in place. We're FinTrack and FinCEN registered. We have all the monitoring. So it's an important part of business. Can't be shut down through regulations. This is a global opportunity. A lot of times I meet and see companies focus really on Canada because we are Canadians. But we're operating in 43 different countries right now and growing. So, the payments market last year in 2023 was approximately 3 trillion US dollars. That's ex-China. So that really is the opportunity we can address. And as I mentioned, this is not a startup. So the platform is built, it's scalable, and it's a highly leverageable business. We've made the investment in the platform. The technology spend has been done. Now it's about adding customers, adding volume, and that all falls to the bottom line. So I'm going to breeze through some of these slides because we spoke about them. Want to focus again, we're B2B. It's the B2B business model. Last year, we did 1.14 billion in US in transaction volume, and we're experiencing 31% revenue growth. The rule of thumb is typically 1% of our volumes translates to our net revenue. This is really there are two distinct parts to our business. What I've described as the payments part, that's the L5 Pay. Very simple. We actually have an L5 Prime business, which is an OTC trading desk. So this we've built, and it's it does all the standard crypto trading platform that are fully commercial in the market right now. We use this as an internal trading desk for ourselves, and we also allow some of our larger clients to white label and use this as a self-serve trading desk. This is exactly the process I described. The consumer comes in. If they choose to pay with crypto, it comes to our payment rails. We charge a fee for that, typically 1 to 5%. And then the merchant can choose to keep it in crypto, or he may want it in US dollars, Canadian dollars, euro, whatever it is. So as I mentioned previously, the payment space in last year was approximately 3 trillion US dollars. What's interesting, though, is less than 2% of that were composed of crypto payments. So it's a tiny percentage in the grand scheme of things. And that's why we're excited. We're able to experience tremendous growth in our volume and in our revenues and profitability with a 2% penetration currently. So you can imagine we're excited as that continues to grow to 3 to 4%, how that's going to affect us. And how is that going to grow? It's really about reducing friction. The magic of our business is that we allow users to have an experience that is just like paying with a credit card or Google Pay or Apple Pay or whatever. You don't know the complexity that's behind the screen, but it just looks simple, straightforward, easy to use, and familiar. But obviously, a lot of technology and innovation happening behind the scenes. So, as companies like us continue to push the innovation there and make it easier, you're going to see that penetration continue to grow. Um, some of the trend numbers, the demographic skews younger. 18 to 35-year-olds typically are very involved in the crypto space, and they want to use it as payments. Some numbers from what we've seen in our business. This is the promise of crypto, right? Cross-border, frictionless transactions and payments, and our merchants actually see that. So they see an increase in cross-border sales, new customers, new demographics are coming to their business. This is really what the business is all about here. It's about processing volume, because 1% drops down is pretty much the net revenue number. So you can see here what's really fascinating, for people looking at this chart. Um, they've done it as a private company, but think about what the price of Bitcoin was doing in these 4 years and 5 years, I guess, right? um, 2022 was a disastrous year for crypto, and some of these years were flat years in the Bitcoin price. So, regardless of the volatility and what the price action in Bitcoin has been, we've been able to grow on a tremendous and hyper scale. So, I'm very proud of what this company's been able to do. But it really goes to show this is a pull market. We've done this all entirely with one salesperson. That's stunning to hear. But what's happened, we don't do marketing. We don't have billboards at hockey games. We don't do things like that. It's been, we do an integration. The merchant is really happy. He tells his friends. There's a word of mouth effect. We get references and we keep building on that. And that's been happening. Year to date, and ending June of this year, we've already processed 879 million US of volume. And I know the July numbers, we've already exceeded what we did in 2023. So we're over, a billion already. Why? Why have we been growing like crazy? Why do people want to use us? It's very simple to integrate. We can get you up and running if you're an online merchant, approximately 1 to 2 weeks. It's APIs, it's widgets. This is not an SAP integration. Crypto, obviously, it's 24/7. So we can take payments 24/7. Banks don't have to be open. That's obviously the convenience factor that's going to make a big difference for some of these merchants who operate globally, right? We don't deal with credit cards, so no chargebacks for the merchants, and our fees are typically pretty low or sometimes no fees in special cases. Um, there's no market volatility risk for the merchants and the consumer. When you're out to buy something, um, you know, you might be aware, but in the blockchain, it takes approximately 10 to 15 minutes for a blockchain to settle. So for that transaction to settle. You as a consumer cannot wait 10, 15 minutes for a purchase to complete. You want to know instantaneously that you've bought it and at what price. So what we do is we lock in that price, and in that 10, 15 minutes, we go and use our OTC trading platform and we hedge out that transaction. So you as a consumer sees instantaneous transaction. You've locked in your price. The merchant himself also has locked in the price that he sold it at. So, and we take that volatility risk off the table for both users. And that's obviously been scalable, reliable, safe, and secure. We've never had an issue being hacked. I think that's another very important part of our business. We are essentially a pipe that you need to pay a toll to get through. So we don't have wallets. We don't have inventory. We don't have hundreds of millions of dollars of crypto sitting in our system and infrastructure. You can hack us all you want. There's nothing there. There's nothing to steal. So I think that should give investors a lot of comfort. You're never going to see a headline risk from ALT5 Sigma that we've been hacked and we lost hundreds of millions of dollars of crypto. Never going to happen because we just don't. That's not our business. As you can see there, FinTrack, FinCEN compliance. Business model 1 to 5% on the payment side for every transaction that goes through, 50 beeps on the trading side. We charge an annual access fee to the platform, $36,000. And then the actual setup fee, as I mentioned, real simple. It's approximately $7,000 to get you up and running. I've got some success stories here, some case studies. I'll run through them very quick, but a large part of our business, we work for FX dealers, online brokers. We allow their clients to fund their accounts or transact and use Bitcoin, Ether, Tether, whatever it is. Here's a South American fintech customer that issues physical and virtual prepaid cards, and we've allowed them for their users to use Bitcoin to fund those cards and turn them into US dollars. They can take the card and go and spend it. Um, we're working for an online education merchant. So they sell online courses. And for whatever reason, they'd like their users to be able to pay in crypto. And it's been convenient. And so it's a win-win for everyone. Here's just a slide of the architecture of the trading platform. Not going to get into this. A lot of this has been talked about, product expansion. Listen, the heavy lifting's done, the platform's done, but there's additional features that might come on board. Clients are always asking for something a little bit different or new. Um, Market expansion, as I mentioned, we're in 43 countries already working. That continues to grow. So that's a big part of our business that we're going to see deeper penetration into Asia, which is a huge crypto market, obviously, um, and the acceptance of crypto in Asia to be used as a payment system. Partnerships, that's where I come in. My 25 years in investment banking, my network of technology companies out there to look for and look for the strategic partners that can help us get further along. For instance, companies like Shopify, Wix, Lightspeed, they already have platforms and massive numbers of merchants on them. Shopify's got over 2 million merchants on their platform. Lightspeed, I think 400,000, Wix 700,000. So if we can integrate with those type of technology platforms, we get access to those merchants without hiring 100 salespeople. And then consolidation, obviously, always looking at new technologies, new functions that we don't have. I will promise you, we are not going to buy something that's a science experiment. It's got to be at least cash flow break even and hopefully cash flow positive. We want stuff that works. So we want a company and products and platforms that work. Cap table, 12.2 million shares outstanding. It's a fairly tight cap table and structure. We're a tiny market cap, and I'll show you here, and we're listed on NASDAQ, obviously. Here's the comp table. The only thing I would point out is typically in the payment space, you've got companies that are growing at a tremendous rate and obviously losing a lot of money, or there are companies that are not growing at all, but just cash flowing, just generating tons of cash flow. Very rarely do you see a company like ours growing on the top line at 133% CAGR annually for the last 4 years, but also generating EBITDA margins. It's approximately less than 30%. So just under 30% EBITDA margins. So fantastic profitability, but also hyper growth. I think that's a really strong combination there. And so that's what I'll say about how we fit into the scheme of things. Obviously, every CEO is going to tell you that their stock's undervalued, but I think we keep doing what we're doing that it should reflect in the stock. Here's a bit of the team, but yeah, Kyle, that sort of runs through the quick elevator pitch.
On that note, we'll pass it off to the viewers. Then we'd love to know what you think in that comment section below. So perhaps we can do an investor Q&A down the road. And consider subscribing as News Catalyst at The Wire. Of course, we'll bring it to you here. But on the note, we look forward to catching you in the next one.